Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Welcome to this week's Top Stock Picks. I'm Tracey Ryniec, and I'm joined at the chairs by Neena and Mishra this week. And for the first time in Zacks Top Stock Picks history, we've chosen the same stocks. But Neena got it first, so she's covering what this hot stock is. And I'm actually doing one of its competitors. So Neena, what is the hot stock?
You're talking about Microsoft. It's weird that both of us chose the same stock initially.
I know. Out of all, there's like 4,000 to choose
exactly. So Microsoft has kind of reinvented itself under the new CEO.
Yeah.
So Satya Nadella took over about 4 years back, and the stock has tripled since then.
Yes.
After many lost years. So Satya Nadella decided to focus on the cloud computing business. They invested a lot in that business, and that is paying off in a big way now.
Yeah.
So their recent results, which was their fiscal fourth quarter, they were excellent. They beat both on the top and bottom lines, and the guidance was also very strong. And these strong results were driven mainly by the growth in the cloud business.
Yeah, cloud is high.
And if you look at the estimates, you know, analysts have been raising their estimates. You can see that estimates for the current year and the next year have gone up a lot since the results. And also, if you look at the price consensus and EPS price chart on our website, that looks like a beautiful chart. The company has missed only twice in the last 5 years. And talking about the cloud business, we know that Amazon is a leader.
Yes, the stock I'm going to be covering.
Yes. So this chart I took from CNBC.com, and you can see that Amazon is a leader with more than 30% share in the cloud infrastructure services market. Microsoft is a distant second with about 13% share, but you can see over the past couple of years,
it's eating into that.
Yeah, their cloud business has been growing more rapidly at a rapid pace compared to Amazon's.
Yeah.
And the company has been making some good acquisitions too.
Yeah.
In 2016, they acquired LinkedIn, and this year, last quarter, they acquired GitHub, which is a code-sharing website. And they have more than $133 billion of cash pile on their balance sheet.
Yeah.
So they have been, spending a lot of that cash for dividends, buybacks, and acquisitions like this. And dividend is pretty nice, more than 1.5% dividend yield as of now. And compared to some other stocks, Microsoft doesn't look insane on valuation basis too.
No, not at all.
It's a Zacks ranked #1 stock, and I think it looks pretty good.
Yeah, that GitHub acquisition was the reason that I decided to buy Microsoft again for my own personal portfolio. Now, I owned it way back in the day after the .com boom. It did come down in price. I'm like, oh, now is the time to buy. But then the shares didn't go anywhere for like a decade or something.
Yes, exactly. They were not doing anything.
No, so I sold a long time ago, but I decided to buy again because that GitHub is huge. I mean, that's the #1 platform for coders.
For code sharing purpose.
Yeah. It's not making any money, though, so far, but I do feel like Microsoft will be able to turn that around.
Yes, I think so. And for disclosure purpose, I also own Microsoft and and Amazon as well.
Okay, well, yes, I might as well add on, I own Amazon, too, so we both own both of these. But yeah, they have similar businesses, but some things are a little bit different in there. And so I do like, you're basically covering most of the cloud if you own both of these.
Both the stocks, yes.
So that's
I agree with you.
That's a cool thing. So Amazon is the stock that I'm bringing, also #1, as you said. And I like it too for the cloud reasons, and that's the reason I originally bought Amazon for my portfolio a couple of years ago. Because the retail side, not so great.
Not so much. The profit margins are so thin.
So
but
small.
Cloud business is making so much money now.
Yeah, over 20% at Amazon. But I do have to say, I was impressed by the margin growth on the retail side this last quarter. Can't believe I'm saying that, but it was higher than what they have done in the past. So a lot of the competitors have been complaining that Amazon's crushing their margins. Well, somehow Amazon is increasing its retail side. But we're still waiting on Whole Foods to kind of see where that shakes out. And you know, they got the delivery you know, they're the number one on that angle. But some of their other retail side, I'm not so sure how the furniture is doing. I trash them a lot on Twitter about the furniture lines. It's just a small little peanuts compared to all this other stuff that they're doing. But as a marketplace, they're still huge. They've been going into Central and South America now, taking on Mercado Libre, which is down there. Don't know how that's going to shake out. And then we're watching what happens in places like India and some of the other foreign markets, because that could be big for them too.
Sure.
But a lot like Microsoft, the reason they're Zacks #1 is because of this earnings picture. So I was stunned to find out they made $4.55 last year. It started off as 12 90 days ago, and now the analysts are at 17.27 for this year. That's growth of 279%. For a company of this size to be growing its earnings like this is like insane.
It was amazing. Yeah, it was a very big beat on the earnings front.
Yeah, it's a once in a lifetime, I think, to see a company doing like this. Although sometimes when I see what Google is doing, I think maybe this is twice in a lifetime. But right now, Amazon has got to be the king of basically earnings growth. I did put up the price and consensus chart, much like yours. I didn't have the earnings surprises on here because Amazon's not great with the earnings surprises. But it's not as clear a picture as what Microsoft is. Microsoft has the more pure, really nice chart where they're growing with the double digits every year. This one kind of all over the place, but that's because the analysts aren't sure what is going on. So much is still secretive about what they do. They seem to give us a lot of information, like we've sold this many Alexas or, you know, this many of this item, but we don't really know, again, like how is that furniture line doing? No one knows. Like suddenly it might just go away and nobody says anything. So I feel like the analysts, it's hard for them to get. They're
trying to figure out. And I think for Amazon, having more than 100 million Prime subscribers is huge. Because Prime customers, they tend to spend a lot more on Amazon.com because of free shipping. Very convenient. Yeah, me too. So I think, and they disclosed this for the first time this year. Earlier, they had never disclosed the number of Prime subscribers. So that is going to be big for Amazon's retail business and cloud business. So of course, continues to do well.
Now, what do you make of advertising? A lot has been written recently about the advertising business of Amazon because it's becoming kind of its own platform. Which you can search it, it's SEO, you can put ads on it. And some of the analysts, I saw numbers floating around like $150 billion business just in advertising.
That could be a big business for Amazon. I think they'll be able to compete with Google and Facebook in that area as well. And I think the shares, they have been doing so well this year. They should continue to do well.
Now, I do have to say, valuations, Microsoft is a much better buy as the value investor here. Neither one is really value stock, but Microsoft, much more realistic. Amazon still gets an F on the value, but it is, you know, got this tremendous earnings growth.
Growth potential
That's
is
what you're paying
huge.
for.
Investors love it as a growth stock, and the stock has been doing so well, so that's why people are willing to pay for it.
Okay. So these are just two of the stocks that we're bringing you here every week on the Top Stock Picks, and we'll be back next week with some more Top Stock Picks, so be sure to tune in on Zacks.com. You don't want to miss a single stock.